If you want to know what the Fed is going to do, it's usually a very simple strategy. They print money. They print money to buy toxic assets. They print money for open market operations to lower interest rates. They are quite one-dimensional. In previous cycles, the Fed has cut interest rates and the effects have not been as wonderful as they have made it seem. In fact, their track record has been quite horrendous. Let's take a look. You came here for the truth, so let me unveil that for you. Today we are going to look at the Federal Reserve. We're going to talk about other central banks. I want to talk about interest rates on a deep level. Let's begin. In the previous video I referenced the market now expecting that the Federal Reserve is going to cut interest rates by 75 basis points. According to history, that means 3 cuts in 2019. That leaves them with very little time to do a lot of work. We'll see if they actually go about doing this, but I'm going to show you what I have seen in the media. If you look at the comment section on that video, there are many individuals who say they will not cut interest rates. You don't know what you're talking about. The market is not expecting this and so on. Well, let me just bring you the facts instead of the hearsay. This is out of Bloomberg. You can see on the left-hand side the different Fed meetings that are anticipated over the next year. You can see the hike probability. Nobody is expecting this at this point. There is no expectation for the Federal Reserve to increase interest rates, even though we are still today at historically unprecedented lows. On the right-hand side, you can see the cut probability. So even in June, the anticipation is there, 37%, and we don't know that they're going to do this. Many people do not expect it to happen in June. It depends on the data, but the consensus has been that they're waiting for more data to come through before they can actually decrease interest rates. If you go to July's meeting, July 31st, the cut probability is 71%, but once we move over to September 18th, it's 97%, and beyond that, we get basically to 100% probability over the next year. I do believe that they're going to have to decrease the interest rates, but as I have mentioned many times before, if they do, that signals something is wrong. They're telling us that inflation is not a problem. They're telling us that employment is not a problem. They look through the statistics of growth. The economy is fantastic and the market's doing well. So why are you decreasing interest rates? I can't get one of these people to actually respond to that according to what we're seeing. Come on, you got to tell the truth here. You got to admit it. If they're willing to bring interest rates down, doesn't that signal a problem? Oh no, they want to do it just to be nice because they love us all? I don't think so. Rate cut expectations are heating up after several senior Federal Reserve officials, including Chairman Jerome Powell, appeared to open the door to easier monetary policy this week. Can it get any easier than where we are today? Apparently it can. The Fed funds futures market now shows traders see a 72% chance of a rate cut at the Fed's July 31st meeting, around the 23% probability of a rate cut at the June meeting. So it depends on where you're grabbing these stats from. Ultimately, the point I'm trying to make here is that over the next few months, the anticipation of a rate cut is increasing. That's really all. If you look at the bottom, you can see this tweet here. Fed funds now pricing in 3 rate cuts this year. And he goes on to basically talk about the issues with Mexico and so on, which as of this recording have apparently been resolved. But the little munchkin actually put out a message saying that in fact, this could turn around if Mexico doesn't keep up its end of the bargain. So I'm not sure that the market is going to worry about that. They're going to ignore that information. That's usually the way it works. Negative information is ignored and positive information makes the stock market rocket higher. Fed's Wall Street obsession could pour fuel on bullish fire. So we're going to look at history instead of just making up opinions, instead of just guessing. Here you can see from Bank of America, we're looking at the blue line, which is the Fed funds rate. You could see it over the years. This is going back into the 90s up until present day. And the yellow line is US consumer confidence. As you can see right here very clearly, as soon as the Federal Reserve brings the Fed funds rate down, consumer consumer confidence is absolutely destroyed. You see that time and time again. This chart here is just showing you 2 previous cycles. To me, that's good enough to be able to determine where it looks like we could head. Now, the Federal Reserve is expected, based on this year and of course so many different sources, that the Federal Reserve is going to start to bring down interest rates. Now, if you look at this historically, time and time again, when they bring interest rates down, a recession is imminent. In fact, I will show you another chart in a second that once they bring interest rates down, that is basically the signal that it is on. So we're going to watch it, even though we're getting all of these positive statistics appearing out there, something is fishy. So this is out of Northman Trader. He just highlighted the different events where Jerome Powell was speaking this year, how he's constantly there to ensure that the markets stay higher and higher. This is one incident here, Powell Cave, Powell Fed meeting in February, Powell on 60 Minutes, another Fed meeting, and then the market kept going higher and higher, but then it started to look very soft throughout May. Well, don't worry, because we're just going to get Powell to come back out and make the market go higher. This is something that happens over and over again, but what created this event in here, the fundamental aspects of it, the slowing growth, the fact that economically things are not looking as positive as they make it seem, but they are ready to act so you don't have to worry. My goodness, we are looking around the world and seeing central banks are constantly talking about issues that are rising. You see the IMF talking about it. You see the World Bank talking about it. But of course, central banks, like the Federal Reserve, say they are ready to act, so people feel confident in that. We have to get smart. Look at the Fed funds rate. You can see it here in this chart in its relation to recessions. Okay, so the gray shaded areas, these are recessions, and just manage your view of this right here for just a second. If I could pull this up, I'm going to look at the recessions. Okay, so the gray area here, that's a recession. As soon as the Fed funds rate, this is the last cycle, started to come down, pretty much within an instant, we were having a recession. If you look at the previous cycle as well, the same exact thing is occurring. Bringing the interest rates down, you could see as it comes down in this one in the 1990s, we have ourselves a recession. Again, recession every single time, because they bring interest rates down when things are starting to look very bad. It doesn't take a genius to figure that out. Now, I have told you time and time again how the interest rates work. If you look at this in my very crude drawing here, basically what we have is that they can never get back to where they were previously. Okay, so that was the expectation, that they would not be able to increase interest rates to, I think it was 5.5% in the previous cycle where they peaked out. So I knew that already, because it just seemed really unlikely that they would get to this point of 5.5. Now, I expected approximately 3% just based on what I was seeing here on the trajectory, but it didn't even get to that point. Now the market has a 0% probability, my goodness, of actually increasing rates beyond where they are today. So we know that they're going to bring it down. Now, it hit a maximum, you know, the window and how it works, of 2.5%. So this here tells us that we have hit an unprecedented low level for a long period of time. They increased interest rates, if you look at it, at the slowest rate ever in history. There is weakness here, and we are 10 years out from a recession. People need to start admitting what's actually going on instead of burying their heads in the sand, instead of taking their 7 shares of Amazon, throwing it in a pile, and actually doing snow angels with it. My goodness, do they look ridiculous right now. I'm going to show you 2 examples of other central banks that have already begun to act. The Reserve Bank of Australia has cut its official interest rate by 0.25% to a new record low of 1.25%. Think about this right now. Globally, the economy is doing so well. We are seeing that everybody is just fantastic. There's just helicopter money coming from all directions. People are living it up. Everyone has a Lamborghini. And of course, the market couldn't be doing better. But just take a look at Australia and the way that they are are reacting, bringing their interest rates down to record lows. They didn't increase. They are decreasing their interest rates. I've shown you this on multiple occasions, especially when I talk about Australia and how it relates to the real estate market. It's very important to watch this data as it comes out. Now, this just shows you that this central bank is concerned about growth, about the slowing global economy, about what's happening in China, about the trade tensions, and so on. So what do? They decrease interest rates. Now, in order to decrease interest rates, people think that they just enter it into a computer. It doesn't work like that at the Reserve Bank. It doesn't work like that at the Fed. You need to understand what open market operations are. If you do not know, I have a video about it. You can check that out. But you need to understand that because, quite frankly, I think a lot of people are really criticizing individuals out there, but not knowing how a central bank actually works. They need to wrap their head around this actual process. India's central bank has cut its benchmark interest rate for the third time this year as it seeks to reverse the country's sharp economic slowdown and also signal the possibility of further easing. So they've already come down to what is considered to be the lowest level since 2010. This is historically very, very low, and I understand that it's higher than other places, but for India, this is very low. It was only maybe last year when I was seeing people from India talking about how the economy was doing so fantastic there, and now we finally have the admissions in the mainstream media that that is not the case. Then we have the ECB. This is the ECB on Twitter. Draghi, several members of the governing council raised the possibility of rate cuts, others the possibility of restarting the asset purchase program or the extension of forward guidance. They have already gone ahead and said we're going to print a whole bunch more money. They've already done the asset purchase program, the CSPP, buying up corporate debt. Imagine that. All these companies go into debt. They have all of these problems economically with their numbers, and what do? They sell that debt to the central bank. This is a scam that works in favor of these multinational corporations, and my goodness, they want to extend it and actually do more of it. I had to reply. I absolutely had to. And you could see at the bottom I wrote here, any chance that corporations can just try and survive on their own without unprecedented intervention? Unfortunately for so many people out there, they don't even know what the hell this is. But basically, we are at a time in this world where we put a bandage on top of the wounds of an economy that is simply bleeding out. And you cannot continue this for the foreseeable future. It will come back to haunt you. When you print money, you are not improving the economy. You are simply creating distortions and dislocations. The central banks around the world are not there to help you. They are not your friend. They are a Trojan horse. They are going to use their abilities to actually disguise what seems like a solution, but is actually a way for unelected, unaccountable technocrats to take over all of the assets that individuals should be having. Instead, it goes to these nameless, faceless entities, and unfortunately, it doesn't look good for the future. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a like on this video, you're supporting me, supporting this channel, so I do appreciate that very much. If you want the financial education you were not taught in school, these two books have everything you need from top to bottom, A to Z. We're talking about Europe, we're talking about central banks, we're talking about the US and China, and every other issue is covered in these two very, very simple books. So check them out at the link in the description if you want the audiobook that's available at themoneygps.com. If you want to know what's really going on in the economy, then you got to watch this video here. We are talking about 7,200 plus stores shutting down in the United States. Click on it and I will see you there.